Hello traders, this is Steve Ribble from Trader Tax Coach. As an accountant specializing in trader taxation, I get questions from people all over the United States on a variety of tax topics. One that frequently comes up deals with self-employment taxes, so I thought I would cover that issue in this brief video. Are traders responsible for self-employment taxes? The easy answer is only on earned income. And traders are exempt from self-employment taxes and payroll taxes because the IRS classifies trading gains as unearned income, regardless of whether you've elected mark-to-market or not, or regardless of whether you are trading within an entity or a corporate structure or not. Your trading gains are always going to be classified as unearned income, therefore they are not subject to self-employment tax or payroll taxes. There are two exceptions to this rule. If you're a proprietary trader who gets a 1099 miscellaneous from the prop firm, then you are subject to self-employment taxes. And if you are a futures trader who are members or dealers of an option or futures exchange, you will again be assessed self-employment taxes on your trading gains. So unless you fall into those two categories, your trading gains are not subject to self-employment tax. Let's take this a step further and look at an example. In 2011, we have a trader who made $100,000 in profits. So here we're going to have $100,000 capital gains taxes due. It's reported on a Schedule D, or it's reported on Form 6781 for futures traders, or Form 4797 if you've elected mark-to-market. This is taxed at ordinary income tax rates, and this entire gain is not subject to self-employment tax because, remember, it is considered unearned income. But what kind of problem does this pose for a trader? Well, since you don't have earned income, you cannot contribute to a retirement plan. Also, health insurance premiums that you might be paying for cannot be deducted at 100%. They're going to go on a Schedule A and deducted that way, and they're subject to a 7.5% of your AGI. So in our $100,000 example, what we've been using here, you can only deduct the amount of expense over $7,500, or $2,500 in this case. So let's look at a solution. The solution to this is to create earned income. And how you do that as a trader is you have to pay yourself or a spouse, if you're married, an income. This income will be paid, that's paid out is going to be subject to self-employment taxes. And if you're an S Corp, then you should use W-2s to generate this income. It's going to reduce your capital gains tax rate. It also enables you to contribute to a retirement plan, and also enables you 100% deduction for health care insurance premiums. So let's look as an example. Let's take a single trader who has $100,000 in gains. All things being equal, they're going to pay $19,098 in taxes. If they paid themselves $11,000 in income, they're going to pay tax rates of $18,874 in taxes and $1,554 in self-employment taxes for a total tax rate due of $20,428. But why are they doing this? They're doing this obviously to contribute to a retirement plan and potentially the health insurance premiums. So let's take it a step further and say that this person makes a $5,000 IRA contribution where they're going to pay $17,474 in taxes and $1,554 in self-employment tax for a total tax of $19,028. And if they have medical expenses of $10,000, they're going to end up paying taxes of $15,075 and $141 in self-employment tax for a total tax bill of $15,216, substantially less than the original $19,000 that they were paying out. Now remember, they wouldn't have been able to deduct this $10,000 medical expense on a Schedule A, as the deductible amount, which was $2,500, is actually less than their standard deduction of $5,700. So therefore, they wouldn't get a deduction; they would just take the standard deduction. So I hope that clears it up for you. And how can Trader Tax Coach help you? Well, we have free trader status evaluation. If you're unsure whether you qualify as a trader in securities for business purposes, we can help you with that. We will review your previous 3 years of tax returns for free, making sure there's no errors or no missed deductions. We also help with mark-to-market election filing. If you're considering forming an entity to trade in, we do entity consultation and formation. We also offer payroll services and, of course, tax preparation services, S Corps, LLCs, partnerships, individual joint returns, and even state tax returns. Tax planning and tax consultation, and also unlimited access is included. We have flat rate pricing, so we do not charge by the hour for any questions that you may have in the future. We appreciate your time today. Here's our contact information up here. If you have any further questions on this or any other tax topic in relation to trading taxation, then contact us at info@tradertaxcoach.net, and you can reach us on the web at tradertaxcoach.net. You can also follow us on Twitter at TraderTaxCoach.